I'm Darth Silver, and I approve of this price. It's interesting. So the Darth Silver thing has grown larger than life, as it were. I got that nickname. Somebody called me that on an interview I was doing for the back in the day Wall Street Silver, and it was in the comments on the side and on YouTube as we were doing it. It was pretty funny. And the reason it came up is I was arguing. Nobody wants the voice of reason at a party. Everybody's celebrating, oh, silver squeeze. And the last thing you want is the guy saying, there's alcohol in that punch. And, maybe we should take a step back and look at
It's a Hollywood party.
That's right. So, so I said, just because somebody doesn't say silver's going to the moon tomorrow doesn't mean they're Darth Vader's cousin or something. And then somebody says, oh, Darth Silver, right? And that's where that took off. But what really torqued people wasn't just my caution, but what really got people upset was I was saying that, look, I think at some point, the way fiat currency is being debased around the world, I get it. At some point, I think gold goes back into circulation, if not in our pockets or medieval coin purses, right? But backing of some kind of gold token system or gold back actually fiat gold again, like the dollar used to be or something like that. I could see a time where gold would go back into circulation because nobody would trust any government to keep its promises. So some kind of real physical backing. And in that world, does silver really need to go back into circulation? If it was physical, like coinage, yeah, you need silver to make change. But in today's world, blockchain solves that. So that was the thing that really got people mad, is I was saying, I think gold will go back into circulation at some point. Maybe the BRICS will do it, right? But I don't necessarily think silver will go there. Maybe in a Mad Max scenario it would.
It's also a quantity thing, I heard, as well. The amount of silver that's actually available to back whatever we're planning on doing here.
That wasn't part of my thesis. But that was just but people who just have this idea silver is money, which, by the way, I agree with. It is the word for money in many languages that I speak, though. Argent, plata, right? But to say that silver might not go back into circulation, that just sent some people off the deep end, and they probably never forgave me to this day. Somebody sent me a message on X the other day saying, silver's gone to $100 an ounce. Too bad you missed out. And this person obviously didn't actually listen to anything I said. The thesis was about silver in circulation. It was never a bear case against silver. And if you actually look at my portfolio, it's full of silver. I'm making money, but no, I'm Darth Silver, so I must be crying in my beer having missed out on $100 silver.
The debate over precious metals often centers on whether they return to monetary circulation. Gold's role as a reserve asset makes this plausible in some form, particularly in a system seeking credibility. Silver's future may differ. While historically used as coinage, modern technology allows fractional value transfers without physical metal. This does not diminish silver's importance as an asset, only its necessity as circulating currency. Confusing circulation with value leads to false conclusions. A metal can appreciate dramatically without serving as everyday money. Investment performance and monetary function are related, but not identical.
I don't know. But I can say something a little more useful than that. And the answer is twofold. If we're in that blow-off top phase, and you look at the charts, it's easy to come to that conclusion, right? The interesting thing about that is that there is good reason to think that if we're in that blow-off top phase, the top is still in front of us. It wasn't last Friday. It could be. Nobody could prove otherwise. But there are reasons, and I don't just mean the fundamentals and the money printing. I'm talking like technicals right now. You look at the charts, and the stocks usually lead the metals. And in 2011, this happened, right? The stocks started heading south like in April or something, and gold didn't peak until September. And so we're not seeing that now. If anything, the alligator jaws are doing the opposite. They're closing. The stocks are finally starting to catch up to the metals.
And we're talking mining stocks? Or
we're talking gold
market.
And silver stocks specifically.
Yes. Okay.
So that suggests that, if we're going into the blow-off top phase, the top is still in front of us. And that's actually investable. If that's true, then, the Johnny-come-latelys, the generalist investors that pile in, they'll go to those, I don't need to give you stock tips, you know who they are, the well-known names, the blue chips in this space. That money will come pouring in. The more headlines we get, another all-time high, right? They'll go to those stocks and they'll go up. So there's actually an investable consequence to this. If we are in that blow off top phase, then the big blue chips in the space will be the first and foremost beneficiaries of that. That's investable. Now, personally, I hope that's not the case. I'm a fundamentalist. I'm looking at the debasement, the central bank buying, and all these other things going on. And I think that gold and silver and anything governments can't print has a long way to go up. So I'm hoping that we'll have a period of consolidation like we did at 3,000 and at 2,000, and then there'll be another bigger, longer move upward later. Now, unfortunately, Mr. Market doesn't care what I hope or want, right? It's going to do what he does. So that comes back to my first answer. I don't know. But if you think you know, right? Okay, so if you think that we're in the blow-off top phase, then that argues for buying, even now, even at these prices, that argues for buying the blue chips. And if you listen to what Rick Rule is saying, I don't know if you've interviewed him yet here, but he sold his physical silver, 80% of it, he said. I'm Darth Silver. He sold 80. I haven't sold any silver. He sold 80% of his physical silver, but he didn't get out of silver. He bought the stocks. So I think that's a legendary speculator saying he thinks we're going into that phase, and that's where the go-to money goes. If you think more the way I do, that we're more likely to go into a period of consolidation, correction before another move, a longer-term move higher, well, then your marching orders are very different. Like, this is investable. Like, if you believe A, you want to buy the blue chips now. If you believe B, what I think, then you actually don't want to do anything right now. You don't want to pay all-time highs. You want to wait for volatility to be your friend here, because in that consolidation phase, gold and silver could easily correct 20, 30, gold could correct 20% easy without breaking the trend at all. Silver could correct 30, 40% without,
because the averages haven't caught up at all.
40% would take us to $60. That is a fantastic price for the actual business of mining this stuff. Like, that's a dream price for producers. So, depending on, I don't know which it is. Make your choice, dear audience. If you think it's A or B, these are your marching orders. It's buy the blue chips or hold on to cash to take advantage of the volatility that's coming our way.
Sharp price advances raise the inevitable question, is this the final surge? Technically, late cycle peaks often show stocks weakening before metals roll over. In past cycles, mining equities lost momentum months ahead of bullion. That pattern is not evident today. Instead, mining shares appear to be catching up, not rolling over. This divergence suggests that if a blow-off phase is underway, it may still be developing rather than concluding. For investors, this distinction matters. Blow-off phases can be profitable, but only if recognized early, not after enthusiasm peaks.
And that ties into what I said before. Like, the stocks led the metals south at the end of the last bull market, the last big bull run. The stocks led the metals south. So when that was starting to happen, if that was the beginning of that, that would have been very worrisome. So I was very relieved to see the stocks show signs of life again. So we're not there yet. Right now, the stocks are still in the, oh my gosh, the metals aren't correcting. And, here's the thing of beauty. The most famous investor of the 20th century is Warren Buffett, or even the beginning of the 21st century. And one of his primary rules for picking stocks was you want something with a moat, right? If you have a great idea that's an idea, well, that can be instantly copied. Whereas if you're Coca-Cola, it's hard for somebody else. Even Pepsi didn't make the same product. Right? You have a moat. And the connection to our business is that mining is the perfect business for a moat. Exploration is never guaranteed to succeed. Even when you do make a discovery, you got to permit it, which is never guaranteed. And then you got to raise the money, and then it takes years to build the mine. If it's one of these big world-class mines, big enough to matter, it is literally years. So even if everything goes right, you're usually talking 10, 15 years. That's a huge moat. So prices are $5,000 gold, $100 silver. Let's say that motivates everybody and their cousin to go out there and start exploring for and developing gold and silver assets. History is telling us, the facts, the numbers are telling us, it'll be years before there's a material impact on supply. That's a moat. And at the same time, again, Warren Buffett is not a mining stock guy, but he likes companies that are consistently profitable, delivering dividends, all that stuff. The producers right now, if you have a silver mine in production right now, that mine was built assuming like $17 silver, maybe $20 on an aggressive assumption. So you're printing cash, like literally. That's if silver is money, you're literally printing cash, right? If you have a gold mine in production now, that thing was built assuming sub $2,000 gold. So your margins are just amazing. So you've got these expanding margins, a huge moat, and the whole world waking up to, oh my gosh, central banks are buying. Oh my gosh, we've got war and fear everywhere. NATO itself is threatened. Like, wow. In a world like that, I think there's a case to be made for these stocks being Buffett friendly.
From here, markets present two plausible paths. One scenario involves a speculative surge, drawing in generalist investors and pushing large mining stocks sharply higher. In that case, established producers could benefit most. The alternative scenario is consolidation, sharp volatility without trend failure. Precious metals could correct meaningfully while remaining in a long-term bull market. Each path demands a different response. Buying strength favors the first view, patience favors the second. Neither approach is universally correct. Strategy depends on belief, risk tolerance, and time horizon, not certainty about the future.
If you're excited about what happened in Q4 of 2025, wait till earnings start crossing the wires. There is one caveat. If you guys remember, I'm talking to the audience now, remember a year ago when we already saw gold go screaming up to near 4,000 or whatever it was. And so there were very high expectations. There are not a lot of analysts in the mainstream that cover gold stocks, but for a company like Newmont, not that I'm recommending it, I'm just saying this is history here. They were the world's largest gold company. So of course there were even mainstream analysts that had
S&P 500
guidance
listed
on it. Right. And so they, as I recall, I don't have the exact numbers, but as I recalled in Q1 of 2025, they reported earnings that were basically triple 2024. But the analyst guidance was for like quadruple. So it missed the guidance and the stock sold off. They tripled their earnings and the stock sold off. So the bad news is that, they're craziness like that can happen again. So it's not safe to assume, oh, this earnings season, all my dreams are going to come true. But if they don't come true, what that would mean is actually a buying opportunity. Yeah. Like when Newmont sold off because it didn't quadruple earnings, it only tripled earnings. That was a spectacular buying opportunity. That was the last buying opportunity before this huge bull run up to all-time highs. So should we be so lucky, there's a chance that this earnings season gives us similar opportunities. Like if you're feeling like you missed it, instead of, giving into FOMO now and chasing these guys now, wait for earnings season, see if there's any unreasonable expectations that could create opportunities.
Mining is uniquely resistant to rapid supply expansion. Discoveries take years to prove, permit, finance, and build. Even at elevated prices, new production cannot arrive quickly. This creates a natural moat. Meanwhile, existing producers benefit immediately from expanding margins, as most mines were built under far lower price assumptions. High prices do not instantly create competition, they reward incumbents. This combination of delayed supply and rising profitability explains why mining equities often lag early in bull markets, then surge once capital recognizes the constraint embedded in the business model.
And this is the kind of thing that, even if you never liked gold or silver before, never into metals and mining, gold is a four-letter word, you look at those kind of earnings beats, and it's one thing to say, okay, this quarter was really great. It's another thing to say this quarter was really great, and the margins are even better now. That's the kind. It doesn't take a rocket scientist or even a rock scientist. Anybody can see that, and come to the rational conclusion.
Absolutely. Lobo, we might have talked about this before, but are you more of a growth-oriented investor or more value? Do you want the dividends, or do you want them to buy any of these companies that are
Well, those are conventional terms, growth versus value. It's different in the mining. I mean, like an exploration company, it's kind of arguably neither.
No, I mean from the producers. What are your expectations now? So, do you want a dividend, or do you want them to come out here and buy something?
No.
And replenish reserves.
But so generally speaking, in the very largest ones, it's kind of different. But for gold and silver producers in particular, I would really rather see the money go into growth. I don't like share buybacks. Don't really care about dividends. I'd rather see them make a value accretive acquisition, or invest in higher throughput. Particularly in this price environment, I'd much rather see them increase their output by 50% than give me another
5%, 3%,
right? Something on a dividend. I'd much rather see that. But in fact, personally, I have a sort of a barbell strategy, a Nassim Taleb within the mining space. And my version of the barbell strategy is I'll have a couple of the very biggest, safest, gold majors or royalties as the relatively safe end of the barbell, and then my juniors on the other end. I don't really have any mid tiers in between, no middle of the road. That's my barbell. So amongst those bigger ones, it doesn't really matter. Gold and silver go up, they'll go up. Whether their dividend goes up or down, I think that's pretty marginal.
Strong earnings do not always translate into immediate share price gains. Expectations matter as much as results. Even exceptional performance can disappoint if forecasts were overly optimistic. Historically, such moments have created some of the best entry points. Volatility, not momentum, often delivers opportunity late in cycles. Rather than chasing headlines, disciplined investors watch for mispricing caused by unrealistic assumptions. In precious metals, fundamentals evolve slowly, while sentiment shifts quickly. Those willing to wait for imbalance rather than certainty are often best positioned when the next phase of the cycle unfolds.